It's going to eliminate any of these bachelorette parties or bachelor parties that head to Vegas. And if you picture the last time you were in Vegas and now erase the bar scene from those memories, and the real question is, will that be enough to discourage people from driving, say, from California or Arizona or Idaho into Las Vegas? Right now, that drive-in traffic is what is driving any pickup in the economy in Las Vegas and in Reno as well. So it's going to be important to watch. The casinos I'm going to watch to see the impact. El Dorado, Red Rock Resorts, Boyd is a big locals gaming casino, and then the strip giants, MGM and Caesars, which has multiple properties. But remember, just yesterday, Caesars announced that Bally's is reopening. It's been going so well, and their per person spend has been increasing, and that's happening around the country.
I was going to say, I'm not the best person to picture Vegas without the bars, because it wouldn't really be taking a lot away from our last visit. So I'm going to let Mike or John maybe speak to this one.
Because we're so wild.
Yeah, because you guys, but yeah, you should see these guys on the weekend, man.
All right, I'll jump in here. I mean, I think the Vegas scene, the Vegas reputation is anything goes. And that really doesn't work when you're in a pandemic. On the one hand, Vegas is really great at having monitoring and rules around security when they're securing their money and when they're securing their environment. But I don't think they've been great about communicating safety during the pandemic. So I contrast that with at least what we'd expect out of Disney World. That's been, Disney's been very strict about the environment for parks from a safety perspective. Maybe Vegas needs to take a page from there.
Mike, thoughts on the stocks?
Actually, wait. I got to just answer that, though. Wynn Resorts was the first out of the box, that I know of, the biggest public company to lay out in pages and pages of documents of what safety and sanitation and cleaning and health standards would look like, testing. Caesars has now made testing mandatory for all its employees. If the gaming regulators and the governor have been reticent to, for instance, there was only a mask mandate within the last couple weeks, it's only because they were hoping that people would go out and protect themselves. And what you saw that first opening weekend at the Cosmopolitan, it was clear. They were like, well, there's no rule that I have to wear a mask. Once the mandate went into place, it started to change.
Michael, last word.
Yeah, no, I mean, I think everybody realizes everything's a trade-off and a compromise and a constrained experience, and that's not going to change. I also think it's a real-world experiment going on. Other locales learning that bars and gyms seem like the big oversteps in the reopening efforts in Vegas and elsewhere.
Exactly, which is extra tough for that area. All right, let's move on. Talk about Tesla, because I do want people's thoughts on this one. Stock is up again, driving to new heights seemingly every day. Shares are up 47% in the last 2 weeks. And as of yesterday, guys, it's the 16th largest stock basically in America. Its good fortunes have investors wondering if it would join the S&P 500, Mike, which would be a huge conundrum to the funds tracking the index, right?
Yes, it will cause a flutter, and I do think it's a matter of when and not if. What needs to happen in terms of meeting S&P standards is Tesla needs kind of a cumulative four-quarter period of profitability. They have a net income standard to get into the S&P 500. What is unusual is how big it would be upon entry, as you say, Kelly. So it would be in the top 20. It's really not that common. Usually it's an upstart company. It's also getting very conspicuous, I would note, all this market value that's building up outside the S&P. Tesla's over $250 billion. Wow. And then if you want to add Spotify, Shopify, Zoom Video, all four of those companies together are more than $500 billion sitting outside the S&P. So it is going to be an issue. You'll probably have to sell down. All the other index funds will probably have to sell down, who knows, 1% of all the other stocks to fit Tesla in there. And in the Reuters article about this, they mentioned the Yahoo entry into the S&P in 1999, which was a massive event. It was also very big upon entry. That also is considered, by the way, a little bit of the first stages of the peaking of that internet bubble, for what that's worth.
And that's, John, I turn to you. I mean, not to kind of have to make a call on whether this is the top for Tesla one way or the other, but short sellers are down $18 billion this year, $4 billion in July. I mean, the stock chart for Tesla, even over the past year, looks almost parabolic.
Yeah, I mean, this is, to me, is one of those be careful what you wish for situations. I don't think anybody, and even the Tesla bulls, are looking at it as some bastion of stability, right? And that's kind of what you think of when you think of the S&P 500 in general. I mean, there are people who either think it's going to go 10x from here or it's going to go down 90% from here in a lot of cases. So, and then you got Elon Musk himself. I mean, he's volatile, and he's key to the stock. So I don't know. I wouldn't put this, and I know you weren't, Mike, in the same bucket as Shopify. I mean, Toby Lütke is a bastion of stability, certainly compared to Elon Musk.
Interesting. Well, I thought the Yahoo analogy was super fascinating, too. I'd be surprised if they put it in the S&P 500, but at some point they might just have to. All right, let's talk a little Uber next. The company is rolling out a new feature that allows drivers to set their own rates. It only applies to the state of California. Uber's doing it as part of surge pricing, but AB5 advocates in the state are already accusing Uber of trying to circumvent labor laws with the feature. Since the ruling itself, AB5 went into effect, guys, Uber shares are only up about 11%. Contessa, this does seem, I mean, the fact they're only doing it in California tells you that they're struggling to cope with the legal landscape there, right?
Well, Uber admitted that it's instituting this because of AB5. They're trying to figure it out, and they're saying, look, we've done a survey. Our drivers prefer to be independent contractors. And then you go back and you look at the methodology of the Uber-initiated survey, and it doesn't look like they surveyed all drivers. I mean, the real question here is about whether Uber drivers are employees and deserve the benefits that go along with being a full-time employee. And the state of California has said yes. So Uber and Lyft and others are going back. They're trying to get back on the ballot this fall with a carve-out for this gig economy that would say you're in an independent contractor and you get to do what you want. But it's clear they've tested this out in Palm Springs and a few other places in California. And the real question that you have if you use Uber is, what does this mean in that race to the bottom? Like if an Uber driver says, all right, I'm going to set my rates 2 times higher and he doesn't get any rides, he's going to have to keep setting his rates lower.
But is it good, John, that at least he can set his rates, or is the company trying to say, hey, look, if our drivers can set their own prices, they're not really employees?
Kelly, I think this is fantastic. I hope they bring it to New Jersey, and I think they're not going far enough. Drivers should be able to set their own rates, and we should have more visibility into the data about exactly what is good or bad about different classes of drivers. I don't know about you, but over the last couple of years, I've gotten into some pretty skanky Ubers and Lyfts. Like they smell, the car, there's stains on the upholstery. I mean, if I pay twice as much in almost any rideshare to be guaranteed an extra high level of service. And I'm not talking about the Uber Black and the premium stuff that's really overpriced.
You want your own music. Like you want, the right scent around you.
It can be a regular car, but just like a nice car that doesn't stink. I'd pay extra for that. So,
John,
yes.
I'm not sure Kelly appreciates you prompting me to make a New Jersey joke right now.
I live in New Jersey, too.
I know.
Well, I haven't used it myself. I've been using it for my mother-in-law and people get back from the train station. John, now I'm feeling like guilty, like I should have been checking up a little bit on their experience. But here's my question for you. If what you describe happens, won't all of us looking at the app be confused by like, wait a minute, I'm getting a driver who says this is going to be a $50 ride, but what if there's another one who says it's only going to be $30? I mean, how do I even sort through those options?
Well, that's why I think they need to make more data available about the level of service in the Uber. Even if it's the, base level Uber, I think the data is the answer here. And that's how the drivers can differentiate themselves. And if you're willing to pay a little bit more for a nice experience, maybe even you'll recognize, what drivers you'll get at that level of experience. Great.
Quick last word, Contessa.
John, you're kind of making the argument for Uber, though, because they say, look, the drivers are using our platform. We're an app, and the drivers are using our app. It's a tech service. And so if that becomes part of the argument that they're going to make and that drivers can set their own rates using this particular app, they certainly, it makes it a little different than if they're setting their own rates as a private car service in New York, New Jersey, or Los Angeles.
It's so true. And you're right. And maybe this is a preview of what's to come if this is their answer for being a high-valued platform without dealing with the regulation. That'll be super interesting. All right, before we go, we want to just talk about TikTok. There's so much news to get to on this one today, but let's start with the phenom Ninja, who has announced that he's deleting TikTok off of all of his devices. Guys, he's calling out the platform's ties to China. Just the latest high-profile embarrassment for this social media company. The U.S. is considering joining India and banning it. The app suffered a severe outage yesterday that seemed to wipe out likes, Mike, which is a horror. I mean, what would your daughters do if they couldn't have TikTok?
They'd have a lot more time on their hands, I think. And didn't we also just get headlines that Amazon is asking its employees to delete the app as well on security concerns? It is very interesting in the sense that, private sector along with governments being concerned about this. I am not convinced that most of the end users are particularly concerned about these privacy issues. That's, remains to be seen as to whether that it's going to be kind of the savior of the platform in this country.